Hello, this is MrChris. Good morning. Today is March 17, 2025, and the stock market is up today. Several of the stocks that I use to trade covered calls are up as well. So hopefully we'll get some good premium today trading the no loss method of the wheel strategy. Today, I will share with you how I actually trade the no loss method of the wheel strategy by selling some cash covered puts and several covered calls. Here's the spreadsheet showing the current positions I have in trading the wheel strategy. Last week, all of my cash covered put positions on QBTS expired worthless. So for this week, I have no positions at all in the cash covered put table, and I have several stocks that I can trade for covered call options. Let's start with the cash covered put options. How much cash reserve do I have remaining that I can use to trade cash covered put options? I have a budget of $300,000 to trade, and I have used $269,000 when I was assigned the stocks I use for trading covered call options. Therefore, my remaining cash reserve is only $31,000. All of my QBTS cash covered put options expired worthless last Friday. So should I sell another QBTS cash covered puts? No. I will skip QBTS at this time, and here is the reason why. Let's take a look at the information on QBTS at stockanalysis.com. As you can see, the current price of QBTS is close to $11, but the current target price is close to $8. There is a big chance that the price of QBTS will pull back closer to $8 per share. Last Thursday, QBTS has an earnings report showing a wider loss. However, there is too much hype right now on QBTS because it also announced the result of the test that the company conducted showing that its quantum computer can outperform classical computer technologies. Hence, its price jumped from about $6 to almost $11 per share. It actually exceeded its previous price ceiling. If I sell cash covered puts on QBTS, in my mind, that there is a big chance that its price will pull back again. So for now, I'm staying away from QBTS. For today's trade, I am actually thinking of selling cash covered put on ACHR on Archer Aviation. I am very bullish in Archer Aviation, so much that I am willing to obtain up to 10,000 shares of ACHR. Let's take a look at ACHR information at stockanalysis.com. Currently, ACHR is close to $8.50 per share. ACHR stock analyst target price is $11.61 per share. And actually, ACHR has reached this target price before. It pulled back after the stock market went south to $8 per share. Now, there is a lot of good things going on with this company that trading a cash covered put for ACHR will be a good trade today. So let's start trading. Let's take a look at ACHR. I have 5,000 shares of ACHR and one current cover call on ACHR with 20 contracts at a strike price of $9.50. This means that I can sell 30 contracts of covered calls on ACHR today. In addition, I do not have any cash covered put positions on ACHR. So let's trade some cash covered puts. Here is the option chain for ACHR. Currently, the price of ACHR is $8.36. I am looking at the available put options with a strike price of $8 and $8.50 with an expiration date of March 21, 2025. The $8 strike price has a bid price of 19 cents, meaning if I sell this put option, I will earn a premium of 19 cents per share. Now, the $8.50 strike price has a bid price of 43 cents per share. So if I sell this put option, I will earn a premium of 43 cents per share. Since I am bullish on ACHR and I am willing to buy shares of ACHR at $8.50, I will sell the put option with the $8.50 strike price. I will sell 20 contracts at a strike price of $8.50 and a bid price of 43 cents. Okay, Let's sell 20 contracts of cash covered put on ACHR with a strike price of $8.50, expiring March 21, 2025. It looks like that the bid price has changed and went down to 42 cents per share, but we'll go ahead with 42 cents. Always trade using limit order, and again, I do not use margins. The order was filled at 42 cents. Let's find out the net premium we've earned for this trade. And there it goes. We just earned $826.44. Now let's sell a covered call. In this example, we will sell covered call for APLD or applied digital. The current price of APLD is close to $7.35, and I have 3,000 shares that was assigned to me at a cost of $8.50. I have another 2,000 shares acquired at $9 per share. For this example, I will only show you the trade I made for the $8.50 shares. For the no-loss method of the wheel strategy, I need to sell covered call options at a strike price of $8.50 or higher because I acquired these shares at $8.50 per share. Let's take a look at the option chain for APLD. The expiration date for March 21, the bid price for covered calls at the strike price of $8.50 is quite low. So let's take a look at March 28. For an expiration date of March 28, the bid price for APLD is at 16 cents per share. This is good enough for me, so I will sell 30 contracts of call options on APLD at a strike price of $8.50 with expiration date of March 28. Again, bid only using limit order, and I do not use margins. It says partially filled, but I have other means of notification through my cell phone that tells me that the trade for 30 contracts were completed or was completed. Checking on the net amount of premium we earned for selling 30 contracts of APLD at a strike price of $8.50 expiring March 28, and we just earned $463.64. At the end of today's trading day, I ended up trading 4 covered call options and 2 cash covered put options. The 4 covered call options are 20 contracts of covered call options on ACHR, expiring March 28 at the strike price of $10 per share, earning me a net premium of $208.44. 10 contracts of covered call options on ACHR, expiring March 28 at the strike price of $10.50 per share, earning me a net premium of $66.22. 30 contracts covered call options on APLD, expiring March 28 at the strike price of $8.50 per share, earning me a net premium of $463.44. 20 contracts covered call options on APLD, expiring March 28 at the strike price of $9 per share, earning me a net premium of $208.44. Now the 2 cash covered put options I traded are 20 contracts of cash covered put options on ACHR, expiring March 21 at the strike price of $8.50 per share, earning me a net premium of $826.44, and another 20 contracts of cash covered put options on ACHR, expiring March 28 at the strike price of $8.50 per share, earning me a net premium of $1,126.40. Note that by trading the 20 cash covered put options on ACHR expiring March 28, I decided to exceed my budget of $300,000 by $3,000. So my total current budget now is at $303,000. My plan is to bring this back down to $300,000 once I have an assigned covered call options. The total amount of earned premium for today is $2,899.58, or just about $3,000. Now let's look at our earned premium for the month of March. I am now at $9,451.28. I still have at least 2 trading days for the rest of March, so hopefully I can at least have $10,000 this month. My total earned premium for the year 2025 now stands at $50,774.11, and the total earned premium from July 2024 to the present is $152,210.15. I hope to get all the way to $200,000 earned premium by end of June 2025. June 2025 will be my 1 year of trading the no-loss method of the wheel strategy. If I achieve 200,000 earned premium by end of June 2025, then my projected total return for trading the no-loss method of the wheel strategy is close to 66%. Let's see if I can make it. That's it. If you like this video or any of the videos in my channel, please hit the like button and subscribe and join me in my journey in generating my retirement income through trading options and investing in high yield funds like yieldmax. If you have any comment or question about the no loss method of the wheel strategy or my perspective about yieldmax, please write a comment and I will answer them the best I can. This is Mr. Chris. Thank you, and I will see you in my next video.